Welcome everyone. The costing, one of the important and like a financial management, a cost accountant, you're a business owner, entrepreneurs. Costing is really important concept to understand the source of financing. So far we have done the source of finances. We identify intellectual finances, and we identify the cash inflows and cash outflow, the parts of the preparing cash flow statement. So here today we are going to start a new topic called costing. So under this topic, we are going to find out the cost concept, mainly understand the concept of and the calculation of the fixed cost, variable cost, and the total costing, and understand the concept of the calculation of revenue, and understand the calculation of the profit and loss, average cost, everything, right? So this is really a pretty simple calculations are here. From this section, most were like calculations questions can be expected, and sometimes defined questions, fixed cost, variable cost, average cost, total revenue, profit, simple business calculation. So I hope you can understand. You will be a good investment for you if you know this main basic business calculations costing section. Okay, I would like to start this case. You know. Chapter with the case study called AMPAT Constructions. AMPAT Construction specializes in house builder in USA, and then it is an established family business. So then given information, established the organization have 79 years trading history. So the company buys plots and build residential properties. It markets to individuals like any other business. It incur a wide range of cost. Some example of the cost incurred: the construction of the house below include bricks, sand, cement, timber. Building construction, you need so much of raw materials, right? So these everything you call direct materials, right? Direct material things like labor, machinery, right? Cement, mixtures, lifting gear, vehicle, tools and equipment such as spades, trowels, and there's a wire cutter, so power tools, protecting clothing, computers, smartphones, office furniture, everything. So sometimes direct material, some are indirect material. And they say the construction employ 140 employees, so yeah, salaries also have to pay, and then builds about 350 houses in each year. In 2016, its total cost was 56,450,200 US dollar. So that's a total cost for this project, because housing construction is not a cheap business. It's a very expensive. You have to spend a lot of money, and because of the materials and labor cost is there. And the total revenue out of this business by selling houses, that there's a good profit margin also, because look at the apartment business, apartment projects are really it's a good investment for a lot of people, because they can sell at a very high price. Sometimes the housing construction profit margin goes like about 300%, 400%, right? For example, apartment, sometimes building cost can be a 10 million, 100 lakhs. Sometimes you can sell that apartment for 40 million, from 400 lakhs. So that's how it goes normally in the construction projects. And they're asking, suggest 4 costs incurred by AMPAT Construction that will rise when the more houses built. So that's very easy question. That's a variable cost they're asking. When you increase the number of houses, we have to buy more cements, right? You have to buy more timber, you have to buy more sand, you have to buy more bricks. These are the, for example, bricks, sand, cement, timber, pipes, glass, electrical wire, because it's variable cost. It increases the number of output, increases the number of houses that you're producing. Okay. The second question they're asking, suggest 4 costs incurred by AMPAT Construction that remain unchanged when more houses are built. This is normally we call the fixed cost thing, right? The fixed cost thing, because when you're doing a business, fixed cost will be not changing. For example, let's say they might have the office administration, office furniture might be a fixed cost, and they might have the same computers. So computer, because they are doing working with the computers and projects and everything, smartphones, right? So these things normally are coming under like a fixed cost category. That is the administration cost. If they have insurance, if they have the salaries, fixed salaries of the workers, sometimes this will unchanged with the there is no variable with the house construction. The costs that do not change with the level of output we call fixed costs. Such as fixed costs are these things. In this case, you can see office expenses, company office, and smartphone, computers, everything. And work out the profit made by the AMPAT Construction. They're asking the profit basic calculation. everyone, total revenue minus total cost. So in this case, they have given total revenue is 64 million, total cost is 56 million. So in this case, you can see there is a about 8 million gross profit we can find out, just roughly. I'm telling 64 million total revenue minus 56 million total cost. So 64 minus 56 mean there's around 8 million US dollar profit margin is there. But to get the accurate value, we have to deduct the like perfect number 64 million 350,000 340,700 minus 56 million 450,200. Like that, you are getting a 7.8 million 7,890,500 profit. So that's a basic ideology here. You can see the total cost and total profit. Total variable cost concept. We can see very good brainstorming session. You can find out the case study of that AMPAT construction. Why does production generate costs? So that's our next one. Normally, like production, when you're doing something, it generates cost. That's why we call economic activity. Economic activity always having some cost. So this cost can be divided into two branches: fixed cost and the variable cost. So fixed cost, you should know the definition of these two. The subject vocabulary section, you can see the fixed costs are the costs that do not vary with the level of output. So usually we draw the fixed cost like this. The cost line, fixed cost curve will be parallel to the quantity axis, right? So that is fixed cost is only just 40,000, which whatever the quantity is 40,000 US dollars, which means the fixed costs do not change with the level of output. Whatever the output, if it is 0, if it is a 550, 100, 150, 200, fixed cost doesn't change. So example of fixed cost also you should know. In some cases they are asking example such as you can see insurance, advertising, all overhead cost, right? Overhead cost of the business organizations, like as I told you, insurance, advertising, sometimes rent of the business. If you have rented place, you have to pay the rent irrespective of the quantity. Like that, there are some certain, it's different from business to business. So like that, this case study. So front-end training, the business provide training courses to the HGV drivers. So this case, the driving school. So the fixed cost normally might be the providing 100 training places. Fixed cost will be 40,000. A number of places will be 150. Fixed cost will rise to 40,000. Like there can be fixed cost, like sometimes you have to pay the leases, rent for the places, sometimes supervisor salaries, like that. So some certain fixed cost curve is there. And look at the second type of cost, variable cost. Variable cost is the definition. You can see the cost that change with the level of output, or the cost can change when the output levels change. Or you can see the cost that change with the level of output, we call variable cost. Variable cost, very easy. That also depends on the business industry. Like we discussed previously about that, the company who producing the construction company, their variable costs are sand, metal, cement, bricks, everything. But for a textile company, like a garment factory, their variable cost can be different. Like their raw materials might be fabric, threads, and like colors, like that. So variable cost normally depending on business to business. So that's why you understand change the level of output. If it is a soft drink business, maybe if you're making a smoothie like a juice bar, it can be like fruits, and sometimes it can be the water, it can be the ice cubes, it can be the flavors, coloring, sugar. These are the variable costs, because it will change with the level of output, like that. So this shows how to draw the variable cost curve. Variable cost curve can be drawn. We are starting with the origin 0, 0, and it will be changed with the level of output. Have a positive angle. You can see the slope of the angle is positive. It goes with the positive correlation between the number of courses and the cost. When you increase the number of courses, cost also gradually increase as a proportionate rate. So it will be go like a straight, it's like an angle will be positive angle like this, with the 0, 0. Right. So this is the variable cost thing. So now you just discuss about the definitions and examples, and how to draw the curves also, fixed cost and variable cost. Basically, definitions are here: fixed costs, the costs that do not change the level of output. Example, insurance. Variable cost, the cost that change with the level of output, such as direct labor cost, direct material costs, and direct other expenses. So the total cost concept. Let's go to the total cost concept also. If you add the fixed cost and variable cost that we discussed above, that we call the total cost. So total cost formula, like we can see here, total cost equal fixed cost plus variable cost. Total cost equal fixed cost plus variable cost. Here, this Millhouse Training School, you can see they are doing 100 courses. Then for one course, they have to spend like 500 variable cost, 40,000 is their fixed cost. Then total cost would be 40,000 plus 100 into 500, which is 50,000. So 40,000 plus 50,000 equal 90,000. Total cost will be 90,000. And this is the total cost curve. We are starting the total cost curve normally like a little bit higher above, not from the 0 origin, because total cost starting with the fixed cost side. Because this case, fixed cost they have to pay whatever the production is produced or not. Even at 0, fixed cost is 40,000. So that fixed cost, you have to start that total cost will be starting from the fixed cost curve, and there plug in the variable cost also add in there, and the curve will be have a positive relation again like this. This time they're not started with the variable cost curve goes with the origin. Here, the total cost curve will be starting with the fixed cost point and then gradually increasing like this. So this is called the total cost curve and total cost formula. Like that, so there can be calculation questions also. There are in past paper questions, and little bit calculation also questions can be come from this section. Now you know how to calculate variable cost, identification of variable cost, identification of the fixed cost, and calculation of the total cost part. You know that. Right. Let's quickly look at this activity case study. Kandasan cricket bats. Kandasan cricket bats. The Kandasan cricket bats manufacture high quality cricket bats. The company, which is based in Colombo, Sri Lanka, employs 6 skilled craftsmen. So there are 6 workers, and the following information they have given. So the 2015. So rent per annum, fixed or variable? Yeah, fixed cost, because that do not change the level of output. Per annum, PA stand for per annum. Per annum is per year, right? And business rates, that's also fixed cost per annum, 5,000 per year. Other fixed costs, definitely fixed cost, that is 25,000. So you can see the total fixed cost right now, if you add them the first 3, 50,000 plus 5,000 plus 25,000 equal how much? 80,000. 80,000. So total cost would be 80,000. Now the variable cost, you can see wood 30 per bat. Other raw materials 10 rupees per bat. So 10 plus 30 is 40, right? 40 plus labor 50 per bat. Plus other variable cost is 10 per bat. If you add them up, 1, 2, 3, 4, you can see 30, 10, 50, 10. So if you add them up, total variable cost coming 100 rupees per bat. We add them these 4 last 4 items: wood, other raw materials, labor charges, and variable cost. That's it, depending on the bat, number of bats they're producing. So we have to find out how many bats they produce, right? Let's go. Now we know the variable cost per bat is, total variable cost per bat is 100 rupees, and total fixed cost for the business is 80,000. Let's answer these questions. What is meant by fixed cost? Use example from the case study in your explanation. So this case, we can say, define the term fixed cost. Fixed cost is the cost that do not change the level of output. Example, rent, rates, like the second one. In 2015, Kandasan cricket bat produced 4,800 bats. Work out the total cost of production. So above we calculate the variable cost per bat is 100 rupees. So then 100 into 4,800 is, if you multiply that, you can get the 480,000. 480,000 variable cost. And fixed cost we calculated, that's 80,000. If you had this first 3 at 80,000, 50,000 plus 5,000 plus 25,000. So 480,000 plus 80,000 equal 560,000. 560,000. This variable fixed cost plus total variable cost is 100 per bat multiplied by 4,800 bats. So 48 plus 80, 560. Okay, the third question, they say in 2016 the rent increased to 60,000 and 6,000 bats produced this time. Work out the effect on this on total cost. Now, if the rent increased to 60,000 means right now the rent is 50,000, then the total cost will increase by 10,000. Right, fixed cost will be increased to 10,000, 80,000 to 90,000. Then because 60,000 plus here 5,000, 25,000, 30,000, then 90,000 altogether. Now fixed cost is right now 80,000. By increasing the rent, it will go to 90,000. 1,000. And also the variable cost also would be changed because now they increase the VAT to 4,800 to 6,000 bats. 6,000 bat. So now 6,000 bats multiplied by 100 equal 6 lakhs. 600,000. 6 lakhs total variable cost of that bat. Last question. So 6 lakhs plus 90,000, how much? 690,000. That's the total cost in that case. So we previously the answer came 560. Now 690,000. 690,000 minus 560,000 means 130,000. That's a cost increment from this situation. Only rent increased by 10,000 and number of bat increases. Because of that, yeah, total variable cost also increase. As a result of that, total cost would be 660,000. That's the effect of this increase in total cost. 130,000 cost will increase by that way. So this is the very big example of the total cost, total calculation of the variable cost, fixed cost, and the total cost calculation. Right? I hope you can understand this one. It was very simple question. So we do more practice questions, then we can further we can identify. Right? So if you know the total cost and if we divide that by quantity, that we can find out the average cost. Average cost. The average cost definition here is a average cost of production is the cost of producing a single unit of output. Single unit of output. So the total, that's how we calculate total cost divided by quantity produced. Total cost divided by quantity produced. So if example, if you have a total cost of $90,000 and if you produce 100 places or 100 training courses, 100 quantity, then average cost per unit, average cost per here, in this case, training cost is $900. $900. This means that this cost provided by the trainee as a HGV driver cost Millhouse training $900. $900. So average cost also sometimes possible, like a small calculations can be expected. Right. Now the cost side is over. We are going to the revenue section, revenue and calculation of the profit section. The revenue part, we can find out the total revenue of the business. We normally calculate by price into quantity. Price into quantity. So TR equal P into Q, price into quantity. Example, then training courses, they're charging 1,500 from one student, and then that there are 100 courses are there. So then 100, maybe 100 individuals, 1,500 times 100 is 150,000. 150,000. That's how we are calculating the total revenue. Total revenue is very easy calculation. How much you produce, how much you are charging for one item. So price into quantity, that's the answer. If you have a different, for example, this is only for one item you're selling. If you're selling multiple items, imagine in a fruit shop, you're selling, papaya, you're selling banana, you're selling grapes, you're selling avocado. So these prices are different. Then how to calculate the total revenue? Then you take one by one individually, different things. For example, number of matching price of apple, 1 kilo of apple, let's say $15. So 15 into how many kilos of apple, and 1 kilo of grapes, again $20. So 20 into how many kilos of grapes. Like that, you have to multiply the individually price into quantity, then add them up, and you can find this total sum as the total revenue. So that was possible, but because every business organization, they are selling multiple items at different multiple prices. That's right. Okay. Now we are moving into the profit calculation, the profitability calculation. You can easily understand. Profit is the difference between total revenue and total cost. If you ask to define, what is in my profit? Profit is the difference between revenue minus cost, or total income minus total expenses. Here, the main reason why firms calculate the cost and revenue is to work out the profit or loss. Profit is the difference between the total revenue and total cost. That's an important definition. Profit is the difference between total revenue and total cost. So this case, imagine the profit of this business, Millhouse, total income 1,500 into 100 and 150,000 minus total expenses 40,000 plus 50,000, 90,000. Fixed cost plus variable cost, you can see 90,000 total cost. So 150,000 minus 90,000 equals $60,000 US. That's the profit of the business. So like that, you can find out some situations where how to increase our profit, how to increase this, that you have to do the marketing, sometimes you have to do more advertising, or sometimes you have to reduce the prices. Then you can increase the number of quantity, but that is depending on the elasticity of the demand. That also keep in mind, right? All right. So now you have the knowledge about the total cost calculation and total revenue calculation and total profit calculation. So cost, revenue, and profit, these three concept has been we identified just now, right? Okay, guys, now let's talk about the Jenkins Limited business. Important activity. You can see Jenkins Limited manufacture electronic control systems that open and shut swing gates. Its most popular product is the underground system, which sells for $250. The system was assembled in a factory using components supplied by firms nearby. In 2015, Jenkins sold 4,500 systems. A total fixed cost for the year were $160,000 and variable cost were $120 per system. So they have given those things. Fixed cost is 160,000 K. You can see, and the variable cost per unit is 120, and they are selling that item for 250. And they have produced 4,500 systems. Okay, this is the basic, all the inputs, variables that they have given: fixed cost, variable cost per unit, selling price, how many quantities they produce, everything. They're asking a couple of questions. In 2015, Jenkins produced and sold 4,500 control systems. Yes. Work out the total cost, work out the total revenue, work out the profit. And they give some other question. In fixed cost, price charge remains same. However, in 2016, variable cost rose to 120 to 140 per system. Right. Let's talk about this one. How to do this? Very important. This is a summary of this lesson. You can see. So far today we talk about the cost calculations, variable cost and fixed cost. If you add them up, we call the total cost. And we talk about the revenue calculation, price into quantity. And we talk about the profit calculation also. Profit equal total revenue minus total cost. Okay, here we got the cost calculation. First of all, look at this case study answer. Cost equal fixed cost and variable cost. Here the business has $160,000 fixed cost they have mentioned in the case study. And in the variable cost section, they sell 4,500 units into 120 per unit. The variable cost per unit is $120. So then you multiply, then you can get the total variable cost 540. So 160 plus 540. So total cost of this business, Jenkins Ltd, $700,000 US, 700 grand. Some people call it 700K or 700 grands, like that. So 700,000 US. Total revenue, price into quantity. Look at the formula. Price $250, quantity 4,500. So they able to collect from sales 1,125,000, right? 1,125,000 US dollars. Now profit calculation. Profit equal total revenue minus total cost. Now total revenue is 1.125 million. Total cost here 700,000. The difference is 425,000 US dollars. Right? So each and every calculation is important. And other thing is, in examination, we are not giving this formula. Formula you have to by heart. Formula you have to understand. I think if you know this concept, you can easily, like no need to by heart. You can easily memorize this thing, like how the total cost will be coming. Total cost is a combination of fixed and variable cost. Total revenue we calculate like that, price into quantity. So then total profit will be revenue minus total cost. So easy like that. If you know this thing, you don't need to memorize and by heart like that. But in examination, we are not supporting these formulas. You have to understand and you have to memorize those parts. Right. And the part 4 asking, there are some modifications to the case study. In 2016, they sold 5,200 items. You can see, and the variable cost also increased to 140. This case again, the total revenue would be 250 times 5,200. Then they are earning 1.3 million total revenue. So total cost would be fixed cost plus variable cost. Fixed cost of this business is 160,000, right? No change. And variable cost increases because 5,200 into 140 now. 140 now, then is 728,000. So that case, what happened? The total cost will be 888,000 US dollar, and total revenue would be 1.3 million. The difference between 1.3 million and 888,000 is the 412,000 US dollar. Like that, again, is small change, but the big difference comes there. Like that. So that's how we have to prepare the total cost, total profit, total revenue, all that calculations. Sometimes we can ask what is average cost also. Average cost equal total cost divided by quantity. In this case, total cost is 888,000. Last case, 888,000 divided by 5,200. Then you can find the total average cost per unit. Like that. Okay. Okay, let's go to MCQ questions. I'm asking questions from different students. Okay. First question goes to Adil. Which is an example of fixed cost in a business, Adil? Raw materials, interest payments, packaging, and wages paid to production workers. Anyone, if you know the answer, you can raise your hand.
So can I say wages to production?
Wages to production.
Yeah. So can like raw materials, the price can change.
Yeah, mainly raw materials, wages, mainly packaging all comes under variable cost because it's changing the level of output, right? Raw materials will change the level of output. Packaging will change the level of output. If you increase the output, you have to increase the packaging cost. If you increase the number of production, you have to pay more for the production workers. But there is one thing not changing, that is the fixed item. I think, yeah, I got a couple of answers. Yeah, this case is correct. B is the correct answer. B, interest payment is the correct answer. Very good. Huh? Okay. Second question I'm asking from Sarah.
Sir?
Yeah.
So can't interest payments also change?
No, it's we're dealing with the bank. Bank loan interest is fixed, right? Interest payment, like if you take a bank overdraft, then it can be different story. But here, interest payment, we are recognizing that interest payment do not change the level of output. No? Because for every output, we are not taking a loan. We are taking a fixed loan. Like it can be 1 million loan, 500,000 loan. That for there has a fixed installment we are paying, fixed interest we are paying. That is not depending on the level of output. But okay, so
Yes.
all other situations, it depends. Everything changes the level of output. B is the correct answer. Okay. Second question I'm asking is Saranya. Okay, if total cost is 35 million and output is 100,000 units, what is the average cost? Average cost. Total cost 335 million. Output is 100,000. What is the average cost? In average cost formula, if you know, average cost equal total cost divided by total quantity output. TC over quantity. So I got 3 answers correct. Yeah, Saranya, Ammar, and Tevin both give the correct answer. It is $350 because if you remove 5 zeros here, 1, 2, 3, 4, 5, $350. Yes, we divide by that. Answer is correct. Cool, right? Okay, next time I'm asking that question from the TJ. Third question, if variable cost is 10 pounds per unit and the fixed cost are 400,000, what is the total cost of producing 50,000 units? So variable cost here 10 pounds, and they are producing 50,000 units. That is 10 into 50,000, and the variable cost is 5 lakhs, 500,000, and fixed cost is 400,000. So what will be the total cost? TJ? Yeah, he gave the correct answer. Yeah, TJ gave the correct answer here. D is the correct. No, A is the correct answer. His answer he gave as the D. So that's not the answer. It's 500,000 plus 400,000 because asking the total cost, right? Total cost of producing this 550,000 units. So variable cost only coming 500,000. Okay, variable cost equal 10 times 50,000. That is 500,000. Plus fixed cost, variable cost plus fixed cost. So fixed cost is 400,000, variable cost is 500,000. Answer is 900,000. Yeah, I got answers from Ammar. Yeah. Okay, last question I'm giving to Ammar. Which one of the following expression is true?
D.
D, profit equal total revenue minus total cost. That's the correct answer. Others are wrong. A, B, C are wrong. Average cost not FC over Q, it's all TC over Q. So answer correct answer here is profit formula. Profit equal total revenue minus total cost. Profit equal total revenue minus total cost, right? Now we are going to a chapter review question also. Chapter A question here, the Model Metal Products. Model Metal Products is a medium-sized engineering company in the last 6 years. The business has begun to specialize in the production of a signage, particularly road signs. Around 80% of this business come from government orders. So that's very important to note down, because 80% of their business is the government contracts, because road signs and everything, normally private sector business, they are not doing. It's the welfare, like common goods. We talk about that thing like the road sign, this right now, like steel, this kind of a road signals, everything is a normally common, like a benefits are there, positive externalities. Therefore, governments are the one who take the contract, like Road Development Authority, construction thing. So they are giving their subcontract to make this like road signs to a company called Model Metal Product. So that's why 80% of the orders coming from the government. So that means their major customer is the government. All right. And they are giving this thing. So this is a product and benefited from the government investment toward building in India, right? One of its recent orders was 1,000 speed limit signs. So table 27.2 shows the variable cost of the information of the order. So this is they are making 1,000 items of speed limit signs like this. I think you can see so many roads, every country, you can see this kind of a speed limits. There are different road signals, signboards, right? So if you have the driving license, you can see, you have to study this thing, because there's a test also to take the driving license. You can see this is speed limit, and this is different, this thing, you can't turn this side, U-turns, you can't turn to left hand side, you can't turn to right hand side, and like there is only weight limit for this, 5 tons only you can go over the bridge, like that. So different thing. If a Y junction is coming there, and then this kind of this type of Y junction is coming there, like different signal are there, signal boards. It's very important for the drivers. So because by using this, you can get some kind of ideas, like always. I think you also definitely can read this thing, especially if you're going in a highway, a normal road. Find out these things. This is the road signs. Usually traffic signals. So their business is making this traffic signal. So their main order coming from the government to this business. In this case, they have given the material cost. The fixed cost of the order were expected to be 600,000 Indian rupee, and most of these costs was paid to specialized machine. Price of each sign would be 2,500. So they're selling one item, one signboard, because not only board, they are giving that with the pipe, GI pipe. You have to fix it and install it, because you have to install it in a to the land, like that. In this luminous colors, everything in night time also anyone can see. There's a small sticker is there, like that. It costs 2,500. It's a reasonable price. So variable cost per sign is like that. So the sheet metal, they cost 200 rupee. Metal pipe, I told you, the pipe, the bar, they are fitting that thing to the earth. That's 500 rupees, and the clips and fastenings 200 another, because you need some clips also to fasten the board. And then paint work 100 rupee, and labor cost 300 rupee. Other variable cost 100 rupee. So altogether, if you add them up, you can find out the total variable cost: 200 plus 500, 700, 700 plus 200, 900, 900 plus 100, 1,000, 1,000 plus 300, 1,300, 1,300 plus 100, 1,400. That means variable cost per sign is 1,400. Selling price is 2,500, and they are selling the order 1,000 signboards they have mentioned in the previous page, and their total fixed cost is 600,000. So they are asking some questions. What is meant by variable costs? What is meant by variable cost? Okay, TJ, what's your answer? What do you think? What do you mean by variable cost? How to define it? The cost? Any idea? Any other? Kiara, what do you think about variable costs? How to define?
The cost that changes when the output.
Very good. Very good. Yeah. Cost that changes with the level of output is a variable cost. Okay. Second question, for the new order, work out the total variable cost and the total cost. So total variable cost, we find out that here 1,400 is the this one total variable cost. So 1,400 into 1,000. So I'll show you the marking scheme. So here total variable cost definition is there. What is meant by variable cost? The variable costs are those costs that are changes in the level of output. This will be, for example, output is increased. Example, in this case, the metal pipes, paint, and model metals. using the road sign. So this is a workout of the variable cost. So 1,400 is the variable cost per road sign, and they're doing 1,000 orders. So 1,400 into 1,000 is 1.4 million. 1.4 million Indian rupees. Total cost of the order. Total cost equal fixed cost plus variable cost. Fixed cost here 600,000, and the variable cost is 1.4 million. So total cost would be 600,000 plus 1.4 million. That is 2 million. So total cost is 2 million. So this case, right? Third question asking plot the cost, variable cost, and the total cost on the graph using the range of output to 0 to 1,000. So this is the plotting the graph. The plotting graph questions recently in an Excel question they haven't checked because this plotting you can sometimes identify, right? From the graph you can identify some questions, like small questions can become there are some past, but plotting questions were not there in your syllabus so far. But if you're going to AS level in business study, there is some like plotting graph questions are there, like demand supply diagrams you have to draw. But here drawing sections are not here, but this question they ask you to draw, just to to get the knowledge. You can see the fixed cost, you can, so 640, you can 600,000, you can draw a straight line. That's called a C curve, fixed cost curve. And then variable cost curve, you can draw like that from 0, 0, and then other variable cost, at the 1,000 quantity. So the variable cost equal 1,400. 1,400. So that calculated 1,000 multiplied by 1,000 per unit at 1,400 per unit. So and then you can multiply like that. You can find out this is in 1,000 rupees, 1.4 million here, and you can connect this line. Total cost also same. Total cost at 0 at 500,000, 600,000 fixed cost amount. At 1,000 quantity, total cost would be 2 million. Here, touching 2 million curve here, 2 million dot here at 1,000, 2 million. That also then you can connect here. You can see the total cost and the total variable cost goes like a parallelly. That's why, because the difference between this parallel is a fixed cost, right? You can see that's why and this angle you can see, this angle will represent the fixed cost, variable cost. So this is the angles normally, fixed cost curve, variable cost, and total cost curve. You must be able to identify the curves, but no need to draw anything, right? Fourth question, they're asking work out the profit made on the order. So profit made on the order is, they have a total revenue of 2,500 into 1,000, 2.5 million. Total cost is now 2 million, right? So they're selling one board to 2,500. So that is 2.5 million, and total cost is 2 million. So they have 500,000 profit is there. It's a reasonable profit for 1,000 items. Average cost for the each sign, so 2 million divided by 1,000. Average cost coming again 2,000 per sign. That's why they're selling this item for 2,500, but average cost is 2,000 rupees per board. Okay, then last question of the day, last question of this case, so they're asking 6 months later, the model metal product gets another order of 1,500 speed limit signs. They have increased it by another 500, government order again. Variable costs remain the same, but fixed costs are only 200,000. Previously 600,000. Now fixed costs only 200,000. However, the government will only pay this time not 2,500, 1,500 for each sign, because you can't negotiate with the government. They are the one who actually decide the price, like a tender prices, right? That's why the government, they are not paying that time 2,500 this time. They're saying, okay, if you want the order, we'll give you 1,500. If you calculate the profit of this situation, this case study, so now their total revenue would be 1,500 into 1,500 quantities. That is 2.25 million. 2.25 million. But the total cost is order. So fixed cost 2 lakhs plus variable cost 1,400 into 1,500. So total cost coming like that. Fixed cost and variable cost 2.3 million. Now look at the situation. Now they are getting a loss. It's not a profit. It's a loss of 50,000 rupee. Small loss, 50,000, right? Sri Lankan rupee also 50,000 is a small amount compared to millions. But he also is Indian also. Indian also doesn't mind. That's the same value. Little bit different, but 50,000 is a quite small amount of loss. Then they're asking, assess whether this should have taken or not. Make a clear judgment in your evaluation. So this is not a 12-mark question, but you have to justify whether you're taking or not. So since get the answer, since model metal would make a loss 50,000 on the new order, it might be refused. That's the real, like normally the rational customer, rational businessman will be which refuse the order because it's a loss making, simply it's loss making. Why you're taking loss making orders? But however, if model metal was short of business, right? If you actually reject that government order, the government will be going to another supply because there are plenty of competition. If you lose the customer, the government will not give you another order for you. It might be take on the order to keep its resources occupied at least. You can occupy your machines, you can occupy your labor and retain the customer. Customer satisfaction is important. You can't miss because 80% of the orders coming from the government. Think about the qualitative factor here, not the quantitative. Although this particular order might make a loss, future orders from the government might be more profitable. Look at the last line. That's the thing. Although this particular order might be make a loss, future orders from the government might be more profitable. That's the thing. So think about the long term, not the short term. Short term is loss. Even though at a loss, you have to operate, you have to survive because the government order you can't miss because government provide 80% of the orders. You can use some supportive things. Therefore, you have to think about the long run. In long run, future, the government might give more orders. It might be profitable. Right? That's how we have to talk about this one. So that from that, we are going to wind up the session of the cash costing part. So today, to sum up the lesson, we talk about the fixed cost, we talk about the variable cost, we talk about the total cost calculations, we talk about the total revenue calculation, profit calculation, average cost calculations, and the right assess questions also we discussed. It's a really important topic today we've done. It's an investment for you if you know these lessons and if you know this concept very well, you can apply it one day in your business. These concepts are really, really important. These are the basic business calculation. That's the end of the lesson 27 costing part. Right. Okay. Thank you very much. See you in my next session in the revision part I'm going to do for the next examination. Thank you very much.